So, once again, welcome back to the session, everyone. And we are in the last day of our session. So, we will be revising all the important areas of the 25 marks questions in this area. And in the last day session, we were discussing about the 50 marks question as well as about the way in which we need to do the questions in relation to matters to be considered in reporting part of the 25 marks area. So, it's a continuation of the same area. So if anyone have missed the last day's sessions, the same videos are available in YouTube. So please do go through the day 1 and day 2 video before attending the day 3. Alright, so today we will focus on other areas of the 25 marks question. So we have already covered the areas of audit risk, business risk and risk of material misstatement, then business risk and analytical procedures, then matters to be concerned further action, discussion with the management and those charged with governance, matters to be concerned audit evidence, matters to be concerned further procedures. Sorry. So these all were the areas which we have covered in the last day session itself. So today we will first focus on the area of critical appraisal. So which is the critical appraisal of the auditor's report itself. So we will go through that area first and then we will move on to the other areas. So basically when it comes to the area of critical appraisal, so you will be getting an auditor's report. Say for example, we will start with the question itself. Add a group. There's a question called add a group in the Shingen. So we will get a question like this. So for the area of critical appraisal related question, you will be getting a requirement using the information contained in Exhibit 2, critically appraise the proposed auditor's report for Mark Company for the year ended 20th Feb 2015. So by using the information in the scenario, they have asked us to critically appraise the proposed auditor's report. So they will be giving us a scenario, and on the basis of the scenario, they will be giving us a proposed extract of the report as well. So the copy of auditor's report will be provided. But in some cases, you will be getting full-fledged auditor's report. But in most majority of situation, when it comes to the paper, audit and assurance, so you will be getting only extract of the auditor's report. So when you get an extract of the auditor's report, you are only required to critically appraise this extract itself, and you are not required to discuss about any matters which is not given in the report. So if you get the materiality from the scenario, you can consider the opinion and other related things, but you are not required to consider the format or full-fledged report as this is just an extract. So this is something called the area of critical appraisal. So it is required by the examiner to evaluate the matters and critically appraise all things that went wrong in the auditor's report. Well, you are not required to redraft the report. You are only required to mention about the mistakes in this report. So, in order to critically appraise an auditor's report, the first thing that you need to know is actually the reporting format. You should be having proper knowledge about the reporting format of a report. So first of all, you have to learn the reporting format of both the auditor's report as well as assurance engagements, and most importantly, you need to understand the reporting format of the PFI engagements as well. So first of all, when it comes to an audit engagement, first of all, you will be including the title, which means the independent auditor's report. That will be the title of the report. Then you should be mentioning the address to whom this auditor's report is being addressed. Normally, the auditor's report will be addressed to the company's shareholders. Then you need to mention about the auditor's opinion, and following the opinion paragraph, you should be including basis of opinion. And from there, you have to include your explanatory paragraphs. So when it comes to the explanatory paragraphs area, we have already studied the explanatory paragraphs, right? So we have studied about emphasis of matter paragraph, other matter paragraph, key audit matter paragraph, other information paragraph, and material uncertainty relating to going concern paragraph. I believe you remember that. So when it comes to emphasis of matter paragraph in an auditor's report, we know that this paragraph will be used specifically by an auditor when he needs to emphasize about a matter which is appropriately presented and disclosed in the financial statements. So only those matters which are material as well as only those factors which are appropriately presented and disclosed shall be emphasized within the emphasis of matter paragraph. And when it comes to other matter paragraph, So this paragraph is specifically used by the auditor when he wants to refer to a matter which is not mentioned in the auditor's report, but which is relating to the current year audit or relating to the auditor's responsibility or relating to auditor's report. So this is a paragraph which is specifically used by the auditors to mention about additional matters that which they need to convey to the users. Then key audit matter paragraph is used specifically for the listed companies. So basically we will be using the key audit matters when the auditor needs to convey about the possibility of having any mistakes in the financials or if it is corrected. So basically these are the matters which are communicated to those charged with governance. So during an audit engagement, definitely the companies auditors will be communicating most significant things to the companies those charged with governance, and out of those things communicated to those charged with governance, auditor might need to convey some things for the knowledge of the users as well. So whatever things that the auditor need to convey to the users out of those matters which have been selected from those charged with governance, auditor will be including that within the key audit matters. And when it comes to other information paragraph, well, we have studied about the responsibility of the auditor relating to other information. As an auditor, it is our responsibility to consider the consistency between financial statements and other information. And when an auditor checks the consistency, first of all, the auditor needs to understand whether there is any factors or matters which shows an inconsistency between financial statements and other information. And if there is any inconsistency between financial statements and other information, auditor need to consider whether that inconsistency is due to the mistake in financial statements or whether it is due to mistake in other information. So if the mistake is within other information, auditor should be communicating the same thing to management, then to those charged with governance, and if none of them are taking actions, the auditor should convey the same to audit committee, and finally the auditor should also reflect it in the auditor's report, and reflecting in auditor's report will be by including the other information paragraph. Auditor will mention about the mistake in other information within the other information paragraph. But on the other hand, the other information paragraph can also be used by the auditor to mention any things in relation to other information. Well, we know that it's nothing but other information is the information which is already there in the company's annual report. And if the auditor is including other information paragraph specifically to mention about the mistakes in relation to other information, then in that case the auditor need to give the other information paragraph immediately after the basis of opinion paragraph. Clear? Alright. And in addition to which, it is also necessary for the auditor to consider including a material uncertainty relating to going concern paragraph. So basically the material uncertainty relating to going concern paragraph will be included by the auditor when there is an uncertainty which is listed in the client company's financials, and if it is appropriately present and disclosed in it, then we can emphasize about the same matter. So emergency or the material uncertainty relating to going concern paragraph is a paragraph specifically used by the auditor to mention about a matter which is relating to a company's uncertainty relating to going concern if it is adequately present and disclosed in the company's financial statements. So these are the paragraph or these are the explanatory paragraphs that can be used by an auditor when preparing their auditor's report. Okay. So immediately after including the basis of opinion, you can consider including all the explanatory paragraphs. Then you will be including responsibilities of the auditor, auditor's management's responsibility, then other reporting responsibility, name of the engagement partner, your signature should be provided, as well as the auditor's address and date should be given. And if you are responsible for preparing an engagement report or the final report for the PFI engagements, so in that case you should be including title such as the independent auditor's report. But in case of PFI, the address will be different. Normally the PFI will not be addressed to the company's shareholders. Instead, it should be addressed to the company's board of directors. And the subject matter should be properly provided. The name of the subject matter, which means the name of the client should be given, period of financial should be given, elements of financial have to be given, and the year and date should also be properly specified. Then the name of the applicable law and standard should be clearly provided. Abbreviation should not be used. Then management's responsibility should be included. Reporting accountant's responsibility and the basis of opinion should be provided. Reference to the purpose and restricted distribution of the report should be given. And your conclusion should be in negative format, because well, we know that when it comes to a PFI engagement, it's a limited assurance engagement, so a negative assurance will be provided. Then you have to consider the basis on which the PFI are prepared and whether the assumptions on the basis of which it's prepared is relevant or not. If there is any caveat, which means if there is any possibility of not achieving this PFI, if you want to include any disclaimer statement, you need to include that. Then accountant's signature and date should be provided, and finally date of the report should also be given. In addition to the PFI report, there are other report also for which you need to consider the reporting format. And most importantly, you should be having proper knowledge about the reporting format of both the audit engagement as well as the PFI engagement. Either of this must be asked for the exam, and most probably you can also expect a question from the area of audit engagement. Alright, so now let's look into the question and let's consider how we need to do a question in relation to critical appraisal of an auditor's report. So when you get a question on critical appraisal of the auditor's report, the first thing that you need to keep in mind. So first of all, whenever you get a question on critical appraisal, you need to consider whether the opinion expressed by the auditor on the basis of the scenario is appropriate. So you need to consider whether the opinion included in the company's financial statement, auditor's report is appropriate. So you must first of all consider the scenario. If there is any misstatement mentioned in the scenario, you need to consider the materiality of the issue. Then you need to consider whether it is pervasive. And first of all, you need to form an opinion on the company's financial on the basis of the information that you have received. And then you need to consider whether the opinion expressed by the auditor is appropriate or not. Then secondly, we need to consider the opinion and basis of opinion headings. So you need to consider whether the heading of the opinion and basis of opinion is appropriate. So in terms of order, we know that first of all opinion paragraph need to be provided, and following the opinion paragraph, separate basis of opinion paragraph should be given. So here in this example case, say for example, if you look at here, first of all you can consider the misstatement. So it is mentioned that the auditor, our audit procedures have proven conclusively that the trade receivables are materially misstated. The finance director of Mark Company, Rita Gilmer, has refused to make adjustment to write a significant amount of trade receivables balance. Therefore, in our opinion, financial statements of Mark Company are materially misstated, and we therefore express a disclaimer of opinion because we do not think they are fairly presented. So they have combined both the basis of opinion and disclaimer of opinion paragraph together. Is it allowed to do that? Definitely not. First of all, opinion paragraph should be given, and following the opinion paragraph only, auditor shall express the basis of opinion paragraph. So this is what you need to mention there. Then again, you can consider the top scenario. So here they have concluded that the company's financial statements is containing a material mistake. So the amount of misstatement is 2.5 million in relation to a customer balance which is outstanding, and there is another mistake of 50,000. And the company's materiality limit is said to be 1.5 million. So well, we know that it's a material misstatement. And shall we consider this mistake as pervasive? No, because the company is having a profit of 11 million. So even if this mistake is adjusted within the profit of the company will not be restated into losses. Therefore, it's a misstatement which is material but not pervasive. And which opinion we need to express in that case? We shall express a qualified opinion. And the examiner have shown that the particular auditor have provided disclaimer of opinion in this situation. So is it a reasonable opinion? No, it is not. There's a misstatement there. So this is what you need to mention. So how can you express your answer? So you have to give the heading called opinion. Then you need to mention that the auditor have expressed a disclaimer of opinion in relation to the Ada Group. In relation to the Mark Company. However, the disclaimer of opinion shall be expressed only when there is a lack of audit evidence and the auditor is not able to form an opinion on the financial statements. However, this is not the case here. The auditor have already concluded that there is a misstatement of 2.5 million, and as compared with that of the materiality level of the company, the amount of mistake needs to be considered as material as it's above the threshold limit. However, it cannot be treated as pervasive as the profit will not be restated into losses even if the misstatements are adjusted. Therefore, in conclusion, it's a mistake which is material but not pervasive, and the auditor shall express a qualified opinion. So this is what you need to mention as opinion paragraph. So you should mention them to change the opinion to qualified opinion. Then again, once that's done, the third thing you need to consider, you need to consider the possibility of having unprofessional wordings. So unprofessional wordings should not be included within an auditor's report. So if you look at this scenario, as you can see over here, they have mentioned the name of the finance director, Rita Gilmer, in the opinion. Is it allowed to do that? Definitely not, because whenever we give an opinion, we should be referring about the board of directors as a whole and not about a single individual or a specific individual. So that should be avoided. So there is unprofessional wordings usage. In addition to this, they are using we do not think that, we don't feel that. So all these kind of words should not be included within an auditor's report. So that should also be removed. So that's a unprofessional wording. Then you should consider the possibility of using vague informations. So maybe it may be mentioned in the auditor's report, we refer to notes to financial statements, but they might not have mentioned about the note number. Is it okay? Definitely not. If they are providing a note, they should be specifying the note number. They might refer like this, we refer to the subject client. Name of the client might not be mentioned. Or we refer to the acquisition of subsidiary. The name of the subsidiary might not be given. All of this is not allowed. We should not be giving vague information. We should be giving proper information for the understanding of the users. Then again, you should consider whether there is any abbreviations used. So it's not allowed to use any abbreviation. Say for example, you are not allowed to use the term IFRS in the auditor's report. Instead, you should be referring to International Financial Reporting Standards. So name of the standard should be properly given and abbreviation should not be used. Then quantification of the misstatement. You need to consider whether the mistake is quantified or not. So which means when you express an opinion, you should be specifically giving your basis of opinion paragraph. And within the basis of opinion paragraph, you need to properly specify the amount of misstatement which have resulted in giving a modified opinion. And you should also be referring to the related standards which is not appropriately followed. So if there is a misstatement of 2.5 million in relation to the revenue recognition, then for example, okay, in that case you need to clearly mention that as per IFRS 15 revenue from contracts with customers, revenue has to be recognized appropriately. However, this is not done by the company properly, which will result in material misstatements. And in addition to which, you should also be mentioning properly about whatever misstatements which are there material in the company's financial statements. Okay, so all those should be mentioned in basis of opinion paragraph. And if it is not mentioned within the basis of opinion paragraph, it shall also be treated as a misstatement. Okay, fine. And in addition to which, you should also be considering the usage of explanatory paragraph. So we have already discussed about the explanatory paragraph, and the explanatory paragraph should be used only in the cases where it is actually applicable. Say for example, in this scenario, they have used the explanatory paragraph such as emphasis of matter. And they have mentioned that there is a legal action relating to 50,000 from an ex-employee, and for which they have recognized the provision. However, they haven't recognized the provision appropriately in the company's financial statements. So, well, we have already understood the fact that the emphasis of matter paragraph should be used only for mentioning about the matters which is appropriately present and disclosed in the financial statements. And as it's mentioned over here, it is not appropriately present and disclosed. Therefore, we won't be able to emphasize about the same matter in the company's auditor's report. In addition to which, even if this is appropriately present and disclosed, in that case also we are not required to include it within the emphasis of matter paragraph, as the amount of legal claim is not material. It's only 50,000 and the company's benchmarks is 1.5 million. So it's literally very insignificant in this case. So the use of emphasis of matter paragraph is inappropriate in this situation. So this is the way in which you will be interpreting your questions on critical appraisal. So you have to consider the opinion, Then the opinion and basis of opinion paragraph needs to be considered. You should consider the usage of unprofessional wording. You should consider whether there is any vague information used. The possibility of using abbreviations should be avoided. Mistakes should be properly quantified, and the explanatory paragraphs usage should also be appropriate. So this will be the way in which you will be analyzing your questions on critical appraisal. So make sure that you are having a clear picture on the area of critical appraisal, and you should be properly be following each of these format in order to make sure that they are providing an auditor's report which is not having any mistakes. Okay, so this is what you need to do. Make sure that you are not redrafting the report. You are only required to critically appraise that. And the next one is the area of advertisement. So we will do one thing. We will revise the theoretical area in relation to the advertisement now. So basically when it comes to the area of advertisement, so well, we have studied multiple theories in relation to the advertisement. And as per ACCA's rule book, we know that an ACCA member is allowed to advertise their service. But as a general provision, it is mentioned that whenever you advertise a service, you should not be advertising in such a manner that it might adversely affect an ACCA member, ACCA or accounting profession as a whole. And the aim of your advertisement should be to inform about the services which you offer rather than to impress the others. And restrictions on practice name and description, we have studied that an ACCA member may use the term ACCA or Chartered Certified Accountants or FCCA with their name. However, you are not allowed to use the term ACCA along with your company name. However, in addition to that, it's mentioned that if you are an accounting firm, and in that case, you can use the term firm of Chartered Certified Accountants or ACCA practice. However, at least half of the partners should be ACCA members, and these members should be having at least 51% of the voting right. And if a firm is having with 100% of members as ACCA members, in that case only they should be using the term members of Association of Chartered Certified Accountants in their professional stationaries. And if it's a mixed firm, if it's a mixed firm in the sense that if the firm is having a mix of professionals from multiple professional accounting bodies, so in that case we should be referring that partners of this firm are members of either whatever be the accounting firms involved, whatever be the professional bodies which are involved, and the name of the professional body should be used there instead of the designation of the members. And for the use of ACCA's logo, we have studied that for every firm, at least one member should be ACCA member. So in that case, they can use the ACCA's logo. And ACCA's logo should be separate from the logo of the firm. The position, size and color of the logo should be clearly recognizable as ACCA's logo itself. And when it comes to the name of practicing firm, we have studied that practicing firm's name should be consistent with the dignity of the profession. Same as that, we should not use a misleading term, and the practice firm's name should not be run in confusion with another firm that is already there in the market. And consider that you are not running a partnership. Instead, it's a sole proprietorship. So in that case, you should not use the term and partners. If it's a sole proprietorship run by Mr. Allen, so you should not use the term Allen and partners in that case, because it will also mislead the users. And when it comes to the audit fees, we have studied that an ACCA member is allowed to charge fees which is fair and reasonable for their service. And we have studied that when we charge a fee, we should be making sure that the fee should be adequately be enough to recover the expenses incurred for the purpose of performing the audit. So the cost of providing the service should always be considered. And in determining the factors to consider before determining the audit fee, make sure that the members are entitled to charge a fair and reasonable fee for their service. And this can be an amount which is appropriate for the work undertaken, or if the fees can be charged according with the basis agreed with the client, or the fee can be charged on the basis of a certain specialized area. Say for example, regularly if every auditor used to charge 10,000 for the audits relating to audit of a client which is operating in the educational market, so in that case we will be also charging the same amount of fees. So we can charge the fees in either of these ways, and if the fees is charged on the basis of the work undertaken by the auditor, then in that case auditor need to consider the seniority of the persons involved in the work, the time which is being spent by each person, degree of risk and responsibility of the that the work is entailed, and the urgency of the work to the client company, importance of work to the client, if there are any overhead expenses involved, all this have to be considered. And when you fix a fees, make sure that you are not fixing a fees which is based on percentage, contingent, or any similar basis. And same as that, lowballing and referral fees are also not allowed. In addition to which, an hourly rate of fee is allowed. So you can charge fees according to the hours that you were involved in the audit engagement. And when you quote an audit fee, make sure that the fee can be adequately be enough to recover all the expenses incurred for the audit. However, if you need to reduce down the audit fee, you can also do that as well. However, it is mentioned that when you are reducing the audit fee, you should be making sure that the quality of the engagement is adequately retained. So this is how you should be performing the audit engagement. So now let's do a question on the audit fees. Sorry, audit. First of all, we do a question on advertisement. Okay. There's a question called SANSEO in our revision kit, question number 50. And in that question, they have asked us to comment on the suitability of the advertisement. In addition to which, we need to consider the ethical and professional issues also. So they have asked us the suitability of advertisement. So we have got an advertisement over here, and we have also got an introductory paragraph. It is mentioned that you are the audit manager in R&Co, a firm of chartered certified accountants which is offering range of assurance related services. R&Co is having 12 officers and 30 partners, and 10 of whom are ACCA members. Okay, so they have given us a proportion of the audit firm. Then this is the provided advertisement, and we are required to critically appraise the advertisement. So you should be considering whether there is any factors that will be misleading the users. You should be considering whether there is any factors that is against the advertising rules which are stated by ACCA. You should be considering whether there is any issues in relation to the ethics as well. So these are the considerations that you need to keep in mind, and on the basis of which you need to perform the critical appraisal of this advertisement. So the first line itself, have you heard enough of your accountants charging you too much for the poor quality services? Does your business need a kickstart? So the first statement itself is misleading, right? Have you had enough of your accountant charging you too much for the poor quality services? So literally they are trying to state that other accountants are charging too much and they are providing poor quality services. So which is nothing but discrediting other professionals, and they are trying to impress others, right? So we have clearly studied in the advertising related rules that the advertisement should not be in such a manner that it may discredit an ACCA accounting profession or any other professionals. So it should not be used as a statement there. In addition to which, the aim of the advertisement should be to inform others about the services provided rather than impressing others. We have studied that as well. So it's against both the rules. So such a statement should not be included in the advertisement. You should ask to take it off. So you have to give the heading first, unprofessional wording, or you can make it as a statement there. Then you need to explain why it should be removed. The next one, you should be considering the other statement. R&Co provides the most comprehensive range of finance and accounting services in the country, as well as they are having the leading tax team. So are they allowed to use such a statement there? They have got only 12 officers and 30 partners, and by which they are mentioning that they provide the most comprehensive range of finance and accounting related services. So by using just 30 partners, any firm will not be able to give a country's total financial and accounting services, because as per rule book also it is not allowed to take that much engagements. So it is also a misleading statement. So if it's a statement without having factual evidence, that should be avoided. Same as that they have stated that they are having the leading tax team. So well, we know that there are no specific criteria available to determine whether a tax team is leading or not. So if it is not having any grounds to specify that, then in that case that should also be avoided. Then they are mentioning that they will be cheaper than the existing service provider. Well, we know that it might create a self-interest rate because it might result in lowballing. So you need to explain that. Then same as that they are offering free business advice to all new audit clients. So it's a self-review thread. So you need to explain it further. Same as that they have used that R&Co chartered certified accountants. Well, we have studied that the firm should use the term chartered certified accountants along with the name of their firm only if the half of the partners are ACCA members and if they are having more than 51% of voting right. And it's clearly mentioned here that they are having only 10 ACCA members in their firm out of total 30 partners. So the majority of members are not ACCA members. So they cannot use the term ACCA along with the name of the firm. So this is how you will be interpreting questions in relation to the advertisement. So make sure that you are familiar with the advertising related provision, and on the basis of which you need to evaluate the scenario, critically analyze each of the terminologies that are being used in the question and properly explain why it is not allowed to be used, as well as you need to take the action. So basically the action will be to remove it from the advertisement. And next we are going to discuss about the questions based on fees, audit fees. See, there's a question called Western in your kit, and it's part 2. Assuming Western & Co is appointed to provide the audit services to Jones Company, discuss the issue to be considered by the audit firm in determining a fee for the audit, including any ethical matters raised. So they have asked us to perform audit procedures. They have asked us to critically consider the matters which we need to consider in relation to determining the audit fees, and they have also asked about the ethical issues that are being mentioned in the scenario. Okay, so please read this part of the question. I'm looking for a firm of auditors who will give me a competitive audit fee. I'm hoping that the fee will be quite low, as I am willing to pay more for services that I consider more beneficial to the business, such as strategic advice. I would like the audit fees to be linked to the Jones Company's success in expanding overseas as a result of the firm's advice. Hopefully, the audit will not be too descriptive, and I would like it to be completed within 4 months of the year end. So they have clearly stated that they are expecting a very low audit fees from us. In addition to which, they are also specifying that they are willing to pay more for the services which they consider beneficial. So they would like to link the audit fee to the success in expanding to the overseas market. And this is what it's mentioned in the scenario. And the examiner is asking you the requirement to consider all the elements before determining the audit fees. So what are the factors we need to consider before determining the audit fees? So basically that part of the question is actually a direct theory, and we have already studied that. Before determining the audit fees, the auditor is required to consider the cost involved in providing the audit engagement. And while determining the audit cost, we need to consider seniority of the staff, time spent by each person, degree of risk and responsibility, urgency of the work to the client, importance of work to the client, as well as the overhead expenses. So these are the factors to be considered in determining the audit fees. So you have to explain that. Secondly, they have also asked us about the ethical issues raised here. So in this case, it is mentioned that they are expecting a quite low audit fee from us. So if the client is expecting a very low audit fee, and if the auditor is agreeing to perform the audit engagement with that low amount of audit fee, there is always a possibility of having lowballing, right? Because auditor might reduce the quality of the audit engagement in accordance with the reduction in the cost of the audit. So automatically there can be chances that auditor might not be willing to perform proper procedures in that situation, which is not allowed. And again, it is mentioned that the fees will be linked to the success in expanding overseas. In that case, it should be considered as a contingent fees, whereby the fees is based on certain conditions. So it is also not allowed. As per ACCA's rulebook, we have studied that percentage or contingent basis fees is not allowed by an auditor, because in case if the auditor's audit engagement results in directly or indirectly in performance of expanding overseas, so automatically there can be chances that the auditor's remuneration will also be reduced. So to avoid such situation, auditor will always be giving favorable opinion to the client so that they will be able to expand to the overseas market very well. And in that case, it might affect the quality of the audit engagement. So this can also be considered as a self-interest rate. And you should also be specifying about the safeguards that need to take in order to avoid this threat. And there's only one safeguard. The auditor should properly discuss this matter with those charged with governance and audit committee, and should inform them that the audit fees will not be very low, and at the same time the fees will not be based on percentage of contingent. Instead, it should be a fixed amount, and or else the fees should also be charged on the basis of the hours spent by the auditor in performing the audit engagement. And if the client is not willing to accept this, in that case auditor should not be continuing with the audit engagement. Auditor should resign from the engagement, or auditor should not accept such an engagement. So this is how you will be stating the safeguard. So when it comes to the area of audit fee or related question, you need to identify the factors in relation to the fees. Then in addition to which, you need to specify the ethical issues involved. And when they ask for the ethical issues relating to the audit fee, even if there are some other ethical issues based on the scenario, you are not required to mention that. You should be clearly specifically mentioning about the ethical threat in relation to the audit fees only. Okay? Alright. So we have covered the area of critical appraisal now, advertisement and audit fees. And next one is the tendering. So basically when it comes to the area of tendering, so basically when we know that as an auditor, it is our responsibility to submit a tender document or an audit proposal in order to get an audit engagement from the client company. So basically we will be preparing an audit proposal whereby we will be including all details in relation to the audit firm in order to attract the client company. So the audit proposal should be prepared by the auditor itself. So basically you will be getting a question on giving the suggestion on what we need to include in an audit proposal in relation to any specific audit client, and they will be giving other requirements as well. Say for example, in this scenario they have given us that explain the specific matters to be included in an audit proposal. That's within a tender document, and they have clearly stated other than those relating to audit fees. So we are not required to specify any audit proposal related comments in relation to the audit fees. Other than that, we are only required to provide specific matters to be included within an audit proposal. So now we need to go through the scenario very well. Okay, so we'll read the scenario now. So it is 1st July 2015. You are the audit manager in Western & Company, which is an international firm of chartered certified accountants which branches in many countries and which offers a range of accounting and assurance related service to its clients. Your responsibilities include reviewing ethical matters which arise with the audit client, dealing with approaches from prospective audit clients. So they have given us an overview about the audit firm, that the audit firm is a firm of chartered certified accountants. They are having branches in many countries and they are offering audit and assurance related services to the client. And now they have given the information relating to the client company as well. The management of John Company has invited Western & Co to submit an audit proposal for their consideration. John's Company was established only 2 years ago, but have grown rapidly, and this will be the first year that an audit is required. In the previous years, a limited assurance review was performed on its financial statements by an unrelated audit firm. The company specializes in the recruitment of medical personnel, and some of its startup funding was raised from a venture capital company. There are plans for company to open branches overseas to help recruit persons from foreign countries. Jones Company has one full-time accountant who uses an off-the-shelf accounting package to record transactions and to prepare the financial information. Company has a financial year ending 30th September 2015. The following comment was made by Bentley Jones, the company's founder and owner manager, and in relation to the audit proposal and potential audit fees. I'm looking for a firm of auditors who will give a competitive audit fee. I'm hoping that this fees will be quite low, as I'm willing to pay more for services that I consider more beneficial to the business, such as strategic advice. I would like the audit fee to be linked to the Jones Company's success in expanding overseas as a result of the audit firm's advice. Hopefully the audit will not be too descriptive, and I would like it to be completed within 4 months of the year end. So they have given us the details of the client company, Jones Company, and they have told us that Jones Company was established just 2 years ago and have grown rapidly. And this is the first year that they are going to have an audit. And it is also mentioned that they will be involved in the business of recruitment of medical personnel, and they are also planning to open some of their branches in the foreign countries. Currently, they are only having one full-time accountant and they are using an off-the-shelf package to record the transactions. And they have given other details in relation to the audit fees as well. And they have also stated that the audit should not be descriptive and they would like the audit to be completed within 4 months from the year end. So this is what they have given us information in relation to the Jones company. So now let's look into the way in which we need to prepare a audit proposal. Well, the examiner will never be asking you to prepare an audit proposal. Instead, they will be asking you the suggestion on what you need to include in an audit proposal. So these are the contents of an audit proposal, but make sure that you should not copy paste any of these statements directly to your answer. You will not get any marks in that. You should be writing your answer specific to the scenario. The first one, you need to include an outline of Western & Co. So you need to include the outline of the audit firm or the outline of Western & Co. Here you should be specifying the details of the, you need to specify that an auditor need to include the details of the audit firm here, including the details which is given in the introductory paragraph in your question. And you should be specifying why you are required to include that. So when it comes to this example, we can mention that the auditor should mention about Western & Co. and it's an international firm of chartered certified accountant, and they should also be clearly specifying that it is having branches in many countries and they are offering audit and assurance services to the client company. This is mainly because Jones company is an international company. They are also planning to expand their operations to overseas countries. Therefore, if we are also having branches in the same countries, we will be able to offer services there as well. In addition to which, they might also offer some other related services. Therefore, we should also be specifying about the services in which we are having proper experience. So this is what you need to mention there. Then you need to identify the requirements of the client company. So when you identify the requirements of the client company, consider whether it's a new client. So it's clearly mentioned that it's a new client for the auditor. So they might not be familiar with the audit related requirements. They will not be familiar with the duties of the auditors and duties of the management in relation to the audit. So all this have to be specified within the requirements of the client. So you have to specify the audit approach. Say for example, if they are auditing for the first time, well, we know that it's very important to specifically perform more procedures in the area of opening balances. So you need to specify that the audit will be focusing more on testing of opening balances and you will be following a full substantive approach. In addition, which the client have requested the audit firm to perform the audit without being too descriptive. So you have to mention that as well, how you're going to perform the audit engagement without being too descriptive for the client company. That should also be clearly specified. So that's what you need to mention within the proposed audit approach. Then communication, which is almost a general paragraph. Then deadlines. You should be considering the deadlines given in the scenario. First of all, you need to understand whether the deadline given in the scenario is appropriate or not. So if the client is requesting the audit engagement to be completed within 2 months from the year end, well, we know that in that case it's not a reasonable time. So you need to specify that the audit firm should clearly confirm, Western & Co should clearly confirm that they will not be able to complete the audit engagement within a span of 2 months, as it's not a reasonable time period, and the audit should also be specifically mentioning about the time period by which they believe they will be able to provide the auditor's report. And in this case, well, we know that client have requested us to perform the audit engagement within 4 months. It's a reasonable time period. Therefore, you can specify the same thing here. You can specify that the client have requested the auditor to perform the audit engagement within a period of 4 months. Therefore, since it's a reasonable time period, auditor should convey to the client that they will be able to perform the audit engagement and they will be able to provide the audit report by the suggested. And key staff and resources. If the audit firm is specifically having any key staff or resources as stated in the scenario, or if you can link the requirement of the client to the key staff and resources, that would be fine. Say for example, you can mention that if the audit firm is having any employees who is already having proper experience in auditing entities that provides the recruitment of employee services, then in that case, the auditor should clearly specify that within the key staff and resources. And in this case, we are not required to consider any points in relation to fees as mentioned in the scenario. And the audit quality control and ethics is almost similar point. You can give the same point there, but make it maximum specific to the scenario. If the client is giving any specific requirement in relation to the quality control, you should be specifying that here. An additional non-audit insurance service, you should be specifying about the firm's provision in offering additional non-audit insurance services. especially it's mentioned in the scenario that the client is willing to pay more for the services which they consider beneficial for the company, which are mainly other assurance services. So if the auditor is having the ability to provide other assurance services without creating any ethical threats, then in that case auditor should specify all the services that they will be able to offer to the client company within the non-audit and assurance services paragraph. So this is how you need to prepare an audit proposal. So you need to include each of these elements in your answer and make it specific to the scenario. Do not write the outline knowledge and you will not get any marks for that. So make sure that you are specifying each of the heading and you should be clearly specifying why you need to use that. Okay. So this is the area of advertisement. Yeah, so we have covered the area of advertisement, tendering, audit fees and critical appraisal. And now let's look into the area of quality control. So basically when it comes to the area of quality control, so you will be getting a scenario and examiner will be asking to evaluate the quality of the engagement. Okay. So you'll be getting a question like this. Using the information in Exhibit 1, evaluate the quality management, ethical and other professional matters raised in respect of planning and performing of the audit of Retriever Group. So they have asked you to evaluate the quality related issues, ethical and professional issues. And you will be getting a scenario like this. So when you get a question in the area of quality control, so the first thing that you need to consider is that you need to consider whether the ISAs are appropriately followed, whether the audit engagement is performed in accordance with the international standards on auditing. So say for example, well, we have already studied in ISA 320 that the materiality should be determined at the planning stage, and once it's determined, it should be reviewed throughout the audit and revised whenever necessary. And as part of your scenario, it may be mentioned that initially the materiality have been determined by the auditor, thereafter it has never been revised. So in that case, it's an issue, right? So you have to mention that. So in the same way you have studied that a written representation cannot be considered as a sufficient appropriate evidence. It can only be used as a support to other audit evidences. And it is mentioned in the scenario that the written representation is being used by the client company. Written representation is used by the client company's auditor. And the auditor have concluded that they have obtained sufficient appropriate evidence, which is not allowed. So you have to specify that. Then you need to consider whether the work is being properly allocated to appropriate level of staff. So all the work should be allocated to appropriate level of staff members. Say for example, highly judgmental areas and all should not be provided to the audit juniors. Then we need to consider whether the audit is time pressured, because if the audit is time pressured, auditor will not be able to obtain sufficient appropriate audit evidence. Therefore, that might result in detection risk. So you need to consider whether the audit is time pressured or not. And again, you need to consider the type of audit evidence obtained is appropriate or not. So in case of type of audit evidence, we have studied about ISA 500 audit evidence, which shows the factors which we need to consider in determining the reliability of the audit evidence. Say for example, we have studied that the written evidence will be more reliable than oral evidence. Evidence obtained by the auditor will be more reliable than evidence provided by the client. It is always better to get external evidences rather than internal evidences. Then we have studied that the original documents will be more reliable than photocopies. And again, we have studied that when the company's efficiency of internal control system increases, the reliability of audit evidence will also be increasing. So these are the factors on the basis of which we need to consider the type of evidence obtained is appropriate or not. Then again, we need to consider whether the audit plan have been appropriately been followed. And there are situations where we need to continue with the audit plan, and there are situations where we need to make sure that we are not following the exact plan and we need to make changes on the basis of the happenings during engagement. So we have literally studied all those cases, right? The cases in which we need to change the plan and the cases in which we are not required to change the plan. You need to consider whether it is appropriately followed. And we know that the work should be properly supervised and reviewed, and the supervision and review should be always top level supervision, which means all the work should be reviewed only by senior officials And if any work is undertaken and reviewed by the same level of staff members, it cannot be considered as an appropriate review. So you need to consider these factors as well in determining whether the quality of an engagement is met. So you need to consider whether the ISIs are followed. Then again you need to consider whether the work is appropriately allocated to proper level of staff. You need to consider whether the work is time pressured, then type of evidence obtained is appropriate or not. You need to consider whether the audit plan is appropriately being followed, and you need to consider whether the work is properly supervised and reviewed. So this is what you need to consider in determining the quality of the engagement. So say for example, let's go through this paragraph. Okay, so let's go through this paragraph. The audit has been quite time pressured. Audit manager told the junior not to perform some of the planned audit procedures on items such as directors' emoluments and share capital, as they considered to be low risk. He also instructed us not to use the firm's statistical sampling method in selecting trade receivables balances for testing, as it would be quicker to pick the sample based on our own judgments. So they have clearly told us that the audit is quite time pressured. So what happens when the audit is time pressured? As we mentioned earlier, in case if the audit engagement is time pressured, then there can be automatically chances that the auditor will not be able to obtain sufficient appropriate audit evidence in relation to the client company, which might result in a detection risk. Same as that it is mentioned that the audit manager is required to perform audit procedures in relation to directors' emoluments and share capital. However, the manager informed the juniors that they are not required to perform that as they are low risk areas. So, are the directors' emoluments and share capital considered to be low risk? Definitely not, right? Because directors' emoluments represents a related party transaction with the client company. So when it comes to the directors' emoluments, the related party transaction should be considered as always material on the basis of nature, and auditors should be performing adequate procedures on that. That too should be performed by a senior. But the juniors were informed not to perform planned audit procedures in relation to this, so the plan is not followed, which is inappropriate. Again, they have mentioned that the share capital is a low risk area. So we need to consider whether it's a listed client or not. So yes, they are a newly listed client. So when it comes to a newly listed client, we know that share capital should also be treated as a significant class of transaction. It should also be treated as a significant account balance, because well we know that when it comes to the share capital, the possibility of having mistakes will be high when there are share issues. And again, when it comes to the area of sampling, it is mentioned that the juniors were required to select the samples, that too based on their own judgments, and they were instructed not to follow the statistical sampling method. We have studied in sampling that the statistical sampling method will be always reliable than judgmental sampling, and that too the sample selection is being provided to the junior staff members who are not having sufficient experience, and they were asked to perform the sample selection by using their own judgments. Well, we know that in case if the sample selection is done by persons who are not having appropriate experience or knowledge, the possibility of having sampling risk, whereby the auditor might express an inappropriate opinion on the financial statements due to the use of sampling techniques, will be high. So in that case, it is inappropriate to allocate the work to junior level staff members. So this is how we will be critically appraising the quality of the audit engagement. So you need to consider these factors in determining whether the quality of the engagement has been met or not. So you need to consider whether the ISAs have been followed. You need to consider whether the work is allocated to appropriate level of staff, whether work is time pressured, whether type of evidence obtained is appropriate, audit plan is properly being followed or not, and you need to consider whether the work is properly supervised and reviewed. So this is what you need to consider in relation to audit procedures. So we have just gone through the area of critical appraisal, advertisement, tendering, audit fee, and quality control. So now let's look into the area of going concern and KPI. So we have got two areas here, going concern and KPI. So there's a question called Kandinsky. We'll be looking question based on international syllabus now. So it is mentioned in the requirement as identify and explain the matters which may cast significant doubt on company's ability to continue as going concern. Recommend the audit procedures to be performed in relation to the going concern matters identified. So first of all, you are required to identify and explain matters which may cast significant doubt on company's ability to continue as going concern. So if you need to have identification and explanation, you should just be considering all those factors within the scenario which shows the company is having inability to continue in going concern, or the factors which may cast doubt on company's ability to continue as going concern. So just by looking at the financials itself, you will be able to understand that the company's revenue has decreased, the company's profit have been restated into losses, and the liability is also very high for the company. So the financials itself shows a worse situation for the company, and it's mentioned over here that the company is having cash balance of only 150,000. So just identify the financial performance, then you need to just explain it in your own words how you believe that the financial performance of the company is not appropriate to continue as going concern. Then again, with regarding the long-term loan, the bank loan was extended in March 2015 by drawing on borrowing facility offered by the bank. Loan carries a fixed interest rate and is secured on the company's property, including the head office and manufacturing side. The first repayment of the loan capital is due on 30th June 2016, when 350,000 is due to be paid. So they have clearly mentioned that they are taking a bank loan, or they have already taken a bank loan which is having very high interest rate, and they have given head office or manufacturing site as their security for the loan, and the first repayment of the loan for the current year is 350,000. So you can just give the heading long-term liabilities. So on the basis of scenario, it's very easy to understand that company is currently struggling to meet their working capital. Especially the current market company is having only 150,000 as their cash balance, and company is required to pay the repayment of loan for amount of 350,000, and which is almost twice the amount of the cash balance that the company is already having. And in case if the loan amount due is not paid on time, what will be the issue in that case? The head office and manufacturing side will be seized by the bank, and in that case the company will not be able to continue with their production process if they are not having the balance. So in such situation, it might result in going concern ability of the company. So you can state that. Again, secondly, Kandinsky company renegotiated its terms of trade with the main supplier of cocoa bean and extended payment term of 50 to 80 days to improve their working capital. So as we can see in the scenario, the payment terms are extended from 50 days to 80 days by almost a month, right? By 30 days. So when it comes to the suppliers, in these kind of cases, the supplier will automatically be dissatisfied if the payment terms are extended significantly. So they will not be willing to provide any further credit in future, or they will not be willing to supply the product to us in this very lengthy extended payment terms. So in such situation, the possibility of having inability to meet the raw material requirement will be high. The company will not be able to meet the customer demands on time. The customers will be dissatisfied, and this will also result in loss of revenue for the company. So you can explain it further on basis of the scenario. So this will be the way in which you will be identifying and evaluating the matters relating to going concern. And secondly, the examiner have also asked you to recommend the audit procedures to be performed in relation to the going concern matters which you have identified. So when they are asking you for the audit procedures to be performed, do not write general point, instead write points specific to the scenario. So they have asked us in relation to the matters which you have identified, what are the audit procedures that we will be able to perform. So well, you need to know whether the company's financials will be okay by the coming years. So to consider that, what you can do, you can review the budgets and forecast of the company. So you can review the forecasted cash flows of Kandinsky company in order to understand whether the company will be able to generate future cash inflows to continuous going concern. Same as that, you need to know the terms of the loan as well as the conditions under which the loan will be the bank will be taking over the company's head office and manufacturing side. So you can obtain the copy of the bank loan agreements in order to confirm the interest rate, the repayment terms, and the terms and conditions and covenants attached to the bank loan, and the cases where the bank will be able to seize the head office and manufacturing side. Same as that, if you want to know whether there is already any breach happened, you can obtain external confirmation from the bank to understand whether the client have already, the client means Kandinsky company have already breached any terms in relation to the existing bank loan. And again, when it comes to the extended payment terms, we can review the correspondence between the client company, that is the Kandinsky company, and the supplier of cocoa bean in order to understand whether the supplier have actually agreed to extend the credit terms by 30 days and whether they are dissatisfied. You will be able to understand that. So in such a way, you should be performing the procedure specific to the scenario. And again, in the part B of the question, actually it's a question based on KPI, or the key performance indicators, which is another area. So when it comes to KPI, the examiner will be asking you to discuss the relevant and measurability of the reported performance information. So these are the performance information that are being listed here in the scenario: graduation rate, academic performance, employability, course satisfaction, and all. So you've got a scenario here. So it's about a university called Rockthorpe University. So they have asked you to discuss the relevance and measurability of the reported performance information. So when the examiner asks you to write the relevance and measurability of the reported performance information, you should always keep in mind that whenever the relevance and measurability of the report is asked, in order to understand whether a KPI is relevant, you should be first considering the stakeholders of the client company. So it's a university. So automatically for the client company, the stakeholders will be government, students, parents, employers, potential students. All this will be the stakeholders. So consider whether it's a relevant performance information for a student, for a parent, for a graduate, for an employer. If yes, then each of them will be relevant. And when it comes to the measurability, you need to consider whether it's a quantitative KPI, which can be considered on the basis of figures, or whether it's a KPI based on judgment. Say for example, graduation rate. Well, we know that it's a KPI based on quantitative element. So in that case, you will be easily be able to evaluate that. It's measurable. The academic performance, employability. The academic performance is a bit quantitative element. Therefore, you will be easily be able to interpret that. Employability. They have mentioned that the percentage of students on graduation obtain graduation level employment. It might not be an easy task to identify whether the student have actually received a graduation level employment or not. If it was the percentage of students who achieve employment after graduation, so in that case we will be easily be able to consider the KPI, but in this case it will be a bit different. And course satisfaction, the percentage of students who rated the university experience as excellent or very good. Well, we know that 70% of students rated the course satisfaction as high. However, it's a highly subjective area because it's a qualitative area, so it might not be easily be able to measure that. So this is how you will be referring to the relevance and measurability of the reported performance information. And you should also be referring to the examination procedures that can be used by the auditor in performing these procedures in relation to the performance information. And you should be considering here what all are the procedures that you can perform. You can consider the possibility of discussing with the management, as we learned earlier, the possibility of having external confirmation, possibility of reviewing correspondence, obtaining written representation, recalculating the figures, then analytical procedures. Then you can also consider matching some data to the supporting documents, and all of those common procedures can be done here. Say for example, for course satisfaction, you can review a sample of feedback forms from the students in order to consider whether the majority of students have rated the university experiences excellent or very good. So you can obtain external confirmations from a sample of students who have achieved the graduation level employment in order to consider whether they have actually received the employment or not. Then you can recalculate the graduation rate by considering the percentage of students who completed, the number of students who completed the graduation program by the number of students who attended for the program to confirm whether the graduation rate is 85% and it's mathematically accurate. So you can perform each of these procedures in order to understand whether the KPI is appropriate. So this will be the same manner in which you will be getting questions on KPI. There's another question called Newman, which is actually based on a airline company. And see, these are the performance achievements of the company, and you will be getting questions to evaluate their performance achievements. So say for example, they have mentioned that they have reduced the fuel consumption by 7%, and their amount spent on fuel expenses reduced by 7%. How can we confirm that? We can perform analytical procedure by comparing current year fuel expense with that of the prior year to consider whether the fuel expenses are reduced by 7%. So this will be the way in which you will be expressing your procedures on KPI. Okay. So this is the area of KPI and going concern. And now we have another two areas, due diligence and PFI examination procedures. So first of all, when it comes to the PFI engagements, so basically the prospective financial information, well, we know that PFI are prospective financial information, which includes budgets and forecasts. So these are not the information which have already been taken place. So these are not historical information. However, since it's based on budgets and forecasts, these are the information that will be going to happen in future. So we won't be able to get much of audit evidence here. So instead we will be focusing more on the procedures such as inquiry and analytical procedures. But make sure that when you write the procedures in relation to KPI, you should not be mentioning to any evidence that will not be available. Okay. So say for example, if you are performing an audit procedure, if the company have actually shown a revenue, you will be able to match the revenue to the supporting documents such as sales invoice. But in this case, you won't be able to connect that because the transaction have not yet been taken place. The revenue shown in the report will be, in the financials will be based on the judgments of the company. So in that case, you will be evaluating the judgment of the company and not the actual revenue. See, these are the procedures that you can perform for KPI. These are some set of general procedures. You can mention the points in relation to recalculate the forecast, then agreement of accounting policies used in the forecast are in compliance with the accounting policies used in the historical information, and all of these points can be considered. However, make sure that instead of these points, you can just use these points as your base, but instead of using the same points, you should be writing points specifically to the scenario. And always consider that whenever you write a KPI, you should focus more on analytical procedure and inquiry. So in this case, they have given us the PFI in relation to the company's P&L, and they have mentioned that the company's revenue will be in the first year will be 30,000, 35,000, then it's increase and increase. So in this case, what you can do, discuss with the management about the reason for increase in revenue by dash percentage and dash percentage in order to understand whether it is due to any significant factors. Then again, they have mentioned that they have fitted all new projector and larger screens in the cinemas. So it's their business. So they have introduced some new assets, and we can consider that. We can discuss with the management whether the projector increase in revenue is due to the introduction of new projectors and larger screens. Then it's mentioned that the ticket price is increased from 7.5 to 10. So in that case, you can discuss with the management about the rationale on the basis of which they have increased the ticket price to consider whether it is reasonable. Alternatively, you can perform analytical procedure by comparing the ticket price of $10 with that of the competitors in order to confirm whether the ticket price increase is reasonable. Then operating expense. They have mentioned that they have included staff cost, depreciation of PPE, repair and maintenance and so on within the operating expense. So to confirm that, what you can do, you can obtain the breakdown of operating expense in order to confirm the amount of staff cost, depreciation of equipment, repair and maintenance to cinemas all are appropriately included. Then you can recalculate the depreciation of PPE to consider whether the mathematical accuracy is appropriate. So you can obtain the breakdown of finance cost in order to confirm whether the finance cost in relation to the new bank loan have been included appropriately. So you can discuss each one of these like this. So it will be purely based on judgments which the data are prepared. So you should be inquiring the management about the rationale, and you should be considering whether the assumptions on the basis of which this PFI is prepared is appropriate or not. Then there's an area called due diligence. And basically when it comes to the due diligence engagement, the examiner will be asking you to recommend additional information which you should be made available for your firm's due diligence review, and they explain the need for such information. So when you get such kind of questions, make sure that, see, when it comes to a due diligence engagement, you need to get to know the meaning of the due diligence engagement first. So when it comes to due diligence engagement, it is nothing but consider that a company is planning to acquire another entity, or a company is planning to make an investment decision. And in order to make sure that the investment decision will be worth it, the auditor will be appointed to evaluate the acquisition target, and we need to know whether that acquisition will be worth it for the client company or not. So such an engagement will be called due diligence engagement. So when it comes to due diligence engagement, therefore you should always think from the perspective of a buyer. You are planning to buy the acquisition target company, and for which you need to evaluate that particular company from the perspective of a buyer. So say for example, it is mentioned here that there are two entities, Jacob Company and Loki Company. So Jacob Company is a company which is currently operating in plumbing and electrical repair and maintenance service, and they are not having any expertise in performing work in relation to swimming pool maintenance as well as hot tub maintenance. So for which they are planning to acquire another company called Loki Company, and they have given us all details in relation to the Loki Company. Say for example, it is mentioned that the company has grown rapidly in the last 3 years as more affluent customers can afford to cost of the installing and maintaining swimming pool and hot tub. Expansion was funded by a significant bank loan. Company relies on the overdraft facility in the winter months when less operating cash inflows arise from the maintenance work. So this is what mentioned. So they are asking in the requirement about the additional information that we require to evaluate the company further, and what is the need for such information. So you have to logically think. So when you are planning to buy a company, that particular acquisition target company is mentioning that they have grown over the years and for which they have taken a bank loan. They are mentioning that they have taken an overdraft facility because the company's cash flows will be less during the winter months. So what are the additional information which we require in relation to this? First of all, give the heading details of bank loan. So we need to obtain details in relation to the bank loan because we need to know the amount borrowed, terms and conditions, covenants attached, and the period by which the loan needs to be repaid, and the outstanding amount as well. Because once the company is being acquired, it will be the responsibility of our company to pay back the whole amount of loan back to the creditor. So if the loan amount is very significant, we need to take up this whole liability. So we need to consider whether we are willing to accept that liability or not. So for which we need additional information relating to the bank loan. And again, we need to get the details in relation to the overdraft facility as well, because once acquisition is done, we will be required to pay back the overdraft facility which is already availed by the company, Loki Company. In addition to which, we should also get to know the details about whether we will be able to take the overdraft facility or not, because during the winter months we will also be facing issues with the operating cash flows, as the company's revenue during the winter months will be low. So only if we get this overdraft facility, we will also be able to continue with the client company's operations once acquisition is done. So we need to know whether we will be able to get that overdraft facility, for which also we require additional information. So this will be the manner in which you will be requesting additional information from the client company, and whenever you request for an additional information, you need to state the purpose as well. So always think from the perspective of a buyer. Plus, you should also be considering some general points. Say for example, you can consider the prior year audited financial statements to know the actual performance. You need to consider the most recent management accounts to understand the difference between the budgets and performance and current performance of the company. Then you need to get the forecasted financial statements in order to understand the possibility of getting future cash flows. You can consider the corporate structure of the company to understand whether both the companies will be able to operate together once acquisition is done. So all these have to be considered in determining whether the company will be able to be acquired. So you should always be thinking from the perspective of a buyer when it comes to the questions relating to due diligence engagements. Clear? Alright. Then again, you might be getting a question on matters to consider before accepting an engagement. So when you get a question on considering the matters before accepting the engagement, so basically these are the factors which you need to consider before accepting an engagement. So you should be considering whether there is sufficient resource availability. You should be considering whether there is risk involved, fees, professional competence, reputation of the client, professional clearance and precondition, independence and objectivity, management integrity, and money laundering. So you should not write this point directly, but instead you will be required by the examiner to specify about the matters which you need to consider before accepting an audit engagement. So you have to properly read the scenario, you have to understand what it is mentioned in the scenario. Say for example, if it is mentioned in the scenario that the client company is having almost 20 subsidiaries and some of the subsidiaries are in foreign country. So you need to first of all mention about the resource availability. You should have to mention that the auditor should first of all consider whether they have sufficient resources in performing the audit engagement. As the client is having more than 20 subsidiaries, it will be quite short time to perform the audit engagement by using a small engagement team. So auditors should consider whether they are having adequate resources. Then risk. Say for example, if the client is having more than 20 subsidiaries, then it's a complex entity. Possibility of mistake in the financials may be high. In the prior year financials, audit report were given as modified, and there can be chances of having uncorrected mistake, which will reflect in the current year opening balance and prior year figures. The risk of the engagement is high. So you need to consider whether risk is acceptable for the auditor or not. You should accept the engagement only if the risk is acceptable. You have to consider the fees, which is adequately be enough to cover the expenses during the audit. So you have to consider the same factors which we studied relating to fee. Professional competence. Auditors should consider whether they are having sufficient knowledge, experience, skills and competence to perform the engagement. They should accept the work only if they are having sufficient knowledge. Say for example, especially when it comes to an industry specific audit, like when we are performing an audit for a client who is operating in a specific industry, you should consider whether you are having industry specific knowledge. You need to consider whether there are any factors that affects the reputation of the client company. Because if there is any significant factors that affect the reputation of the client, automatically the reputation of the audit firm will also be affected. Then again, preconditions for the audit and professional clearance, which means communication with the prior year auditor to consider the factors which were significant to the prior year audit engagement. You need to consider whether there are any factors that affects the independence and objectivity as well as management integrity. Possibility of having money laundering should also be considered. Out of all these factors, you can use all of these factors on the basis of scenario. However, the professional clearance and preconditions of the audit should be considered mandatorily in case of an audit engagement. But when it comes to the other engagements such as PFI and all, when they ask for matters to consider before accepting PFI engagement, you should not be mentioning about the professional clearance and precondition for the audit. Instead, when it comes to a PFI engagement, you should be specifically considering these factors as per ISA 3400. You need to consider the intended users of the information. Then you need to consider whether the information will be used for general or limited distribution. The nature of assumptions, whether it's based on forecast or projection. The elements to be covered, such as the PFI contains the statement of financial position only, or the statement of cash flows as well, or the statement of forecasted P&L. All this have to be considered. The period covered by the information should also be considered, because as a period increases, the reliability of the evidences will decrease. So we have to consider each one of these mandatorily in case of a PFI engagement. So the examiner might not be specifying that it's a PFI engagement, but when you look at the scenario, you will be easily able to find that it's a forecast information. So whenever it's a forecast, it's a PFI. So in that case, the matters before accepting PFI engagement will be specific matters, plus you need to consider the general points also in accordance with the scenario. Okay. So this is what you need to consider before accepting matters in relation to a engagement. So say for example, there's a question called dragon. Okay. So in this case, if you look at the group structure, it is mentioned that the parent company owns 20 subsidiaries, all of whom are wholly owned. Half of the subsidiaries are in the same country as the parent and half overseas. Most of the foreign subsidiaries report under same financial reporting framework as Dragon Company, but several prepare financials using local accounting rules. So first of all, you can mention about the resource availability, right? Because they have got 20 subsidiaries and half of the subsidiaries are in foreign country. So you should be having sufficient resources to perform the audit of 20 subsidiary within a limited time period. In addition to which, since some of the subsidiaries are in foreign country, you should also be considering your ability to perform the audit engagement there. So you should accept the engagement only if you will be able to offer the services. And again, you can consider about the professional competence. It is clearly mentioned that the client is having foreign subsidiaries and they are using local accounting rules. So you should be having knowledge relating to the local accounting rules, and you should consider the audit engagement only if you are familiar with those local accounting rules. So this will be the way in which you will be identifying, and you have to explain it further. You have to pick purely the points on the basis of the scenario. Okay. And again, well, we have actually studied the engagement letter earlier, right? Engagement, sorry. Letter. So the engagement letter is actually a written contract between the auditor and the client company, which specifies about all details in relation to a audit engagement. And these are the terms of the engagement letter. So normally an engagement letter should contain the objective and scope of the audit, responsibilities of the auditor, responsibilities of the management, applicable financial reporting framework, form and content of the report. All this will be specified. In addition to which, if the auditor feels any issues that might create an issue later on, or if any terms that might be in conflict later, can be included within an engagement letter. You can include terms in relation to fees, in relation to the liability and anything. So you will be getting question on matters to consider before agreeing the terms of an engagement. Matters to be considered before accepting the engagement is what we discussed earlier. Now matters to be considered before agreeing the terms of an engagement. So when I get a question on matters to consider before agreeing the terms, you need to first of all understand whether the terms are being included. The terms will be included within an engagement letter. So the content of the engagement letter have to be discussed there when it comes to matters to be considered before agreeing the terms of an engagement. Plus, in addition to which, you should also be considering the PFI related elements specifically when it comes to a PFI engagement. If the examiner asks you to consider matters to be considered before accepting a PFI engagement, you should be specifically be mentioning about the matters relating to PFI engagement, which we discussed earlier, ISI 3400, intended use, limited distribution, then period covered, then elements of the report, all those have to be considered. Plus, these common terms of engagement should also be considered. So if it's an audit engagement and the examiner asks for matters to consider before accepting the terms, you need to specify these matters. And if it's a PFI engagement and the examiner is requesting you to perform requesting you to identify those matters which you need to consider before agreeing the terms, you should be specifying the terms of engagement letter plus the factors relating to PFI engagements. Alright, so this is how you will be getting questions from the area of 50 marks question as well as the 25 marks question. So these are the portions which we were covering over our 100 hours of session, which we have quickly discussed. We have done almost all the questions in the revision kit. We have gone through all the theoretical areas. So this was very quick and first revision of all the theoretical as well as the examinable content. So I believe this session was helpful for you. So for more detailed session, you can apply for our regular classes. But these were just a sample session in which we were quickly going through all the important areas. So when it comes to our upcoming exam, make sure that you are familiar with all type of questions. Practice maximum questions as possible. Practice and keep on practicing using the computer as well as using our exam practice platform. And in addition to which, make sure that whenever you practice a question, after the practice is done, you should be agreeing you should match the answer to the revision kit answers. But you might not be able to find the exact match, but still make sure that you are following the performance appropriately. Above all, please do revise the important accounting standards which are there in our SBA paper, because knowledge of accounting standards is very important for the papers AAA. And please do focus on the requirement as well, because if there is any misunderstanding in the requirement, then your total answer will be wrong. So make sure that you are clearly following the instructions provided by the examiner and you are clearly following the requirement as well. So do well, all the very best for your exam. Do clear the exam in the upcoming window itself. All the very best everyone. Thank you so much for the session.